Hey everybody, hope you're all well. It's Monday, the 4th of May, 2020. May the 4th be with you. This lockdown has got me forgetting dates and times, so please forgive me. I am a bit scatterbrained when it comes to the date and time, or even what day of the week it is. It's just a result of the quarantine fatigue. Anyway, as you can see behind me, you've got a sea of red. The only green ones only green currencies are actually the US dollar pegged currencies, and Bitcoin's lost 3.57% of its value. Ethereum lost 6.3%. XRP's lost 4.9%. But in reality, guys, the rest of the cryptocurrencies don't really matter. They're all subservient to Bitcoin. That's the big daddy. If Bitcoin fails, they all fail. So that's the only one to watch. It's the only one that's sound money. The rest is just a distraction. Okay, guys, as usual, this is EGIL.TRADE, brought to you by Let's Talk Crypto podcast and proudly sponsored by CryptoFish, a easy-to-use platform for you to buy Bitcoin and the other top cryptocurrencies. Although you wouldn't bother with them, you would just buy Bitcoin. You can buy, exchange, store, earn, and send cryptocurrency. And you can use euros or US dollars or whatever currency that the country that you're in. Internationally, you can use credit card or debit card. In the US, you can use ACH. In Europe, you can use SEPA bank transfers. In the UK, you can use Foster payments via your bank account or internet banking. And soon we'll be releasing Wire in the US. Other countries are going to be brought on pretty soon, including Australia and South Africa via bank transfer. But our developers are working hard on that, and as soon as it's released, I will let you know. Okay, we also have a learning section. You've got Bitcoin, Crypto, Blockchain 101, a Cryptopedia, which is like a glossary for all the terms in the Bitcoin space, an absolutely free video learning portal, and our crypto podcast. Moving on to the Crypto Fear and Greed Index. We're still sitting at quite a low reading. We're sitting at 44. When I say low, it's not an extreme read. It's nothing that we can sort of trade based on, but it is quite low considering that we are, close to 9,000 or 8,007 or 8,687 right now, and we never even got into a greed reading, which would have been a tick above 50. So that's something that I'm keeping my eye on, and it's causing me to lean more bullish. In the medium term, short term, I do anticipate this pullback is going to have a little bit more juice to it, and I'm hoping to get to 83 or 82 to 78 in that sort of $400 range there. I've got order blocks and some interesting EMAs down there that I would like to see us pull into for me to take some more longs. Just remember, this is not trading advice. This is not investment advice. I do not do this as my sole source of income. Therefore, I am not professional. However, I do trade. Take it as you will. It's entertainment or educational. That's about it. Okay. So yeah, the usefulness of this index is obviously when it's in extreme reads, it doesn't generally stay there for long, and then you get a counter move in price. However, this last time it has stayed low for very, very, very long, and it's still relatively low, compared to where price action is at the moment. So yeah, I'm not expecting complete devastation of price. I think the market's being a little bit pessimistic here. I think we do have some more upside after a little healthy pullback on medium time frames. When I say medium or to low time frames, I mean like 12-hour pullback. Not 12 hours, but on the 12-hour chart, I'm watching for a pullback. On the 2-day chart, I'm watching for a pullback. Long-term macro, I'm bullish. But yeah, we're obviously going to have our ups and downs in between. All right, so here's something else I wanted to show you guys today. This is something called Trading Light. You can find it at tradinglight.com. I started using this purely educational, informational purposes about two or 3 months ago. I can't remember when they were doing their beta testing. I was allowed into to test it. It is a great tool. I'm not an order book trader. Price action first, but what I do like about this is just trying to get sort of insight into what the bigger players are doing, especially if we go down here. You'll see that a whole lot of orders have been peppered around the 6,300 to 5,100 range, and if I can pull this up, you will see that previously, these orders were sitting much lower. In fact, from 4,000 to 5,000. Now they've all simultaneously moved from 4,000 low to 5,000, and from 5,000 to 6,300. Almost lockstep at the same time. So I can't say with any degree of certainty whether it's one entity, a group, or whatever it is, but it is quite interesting that they all moved at the same time and that support has moved up. I know that orders can be spoofed and can be pulled from the market, so I don't trade based on that, but yeah, it's educational, it's interesting, and it's informative, and it just, yeah, I like to keep an eye on it. How you use this heat map is you have all the orders stacked up here. It actually shows you the values. You can see 2 million, 3 million, 4 million, 2 million. There's even a 7 million miles are bad orders over there. So yeah, we're tightening up here. Orders both above and below. Yeah, go check it out, guys. Tradinglight.com. Just another tool that you can add to your trading or to your analysis. Yeah, it'll do more good than harm. So why not check it out? And by the way, I haven't been paid to say this. I'm not affiliated to them at all. I'm just sharing. That's all. Okay, I want to jump quickly into our charts. I've got the monthly up. Nothing's changed in terms of nothing. I haven't changed any of my trend lines, or haven't changed any of my analysis here since the last time, even this week. So I've still got all my year opens, 2018, 2020, 2019, and we'll just have to go a little bit lower, and you will see I've got 2017 down there. Why do I have those marked out? I have found personally that Bitcoin likes to come back and tag its year opens. I'm not giving any time frame for that, but it generally has done that. It's done it quite a few times. You'll see here in it tagged the year open of 2018, excuse me. It's also tagged the year open of 2019, there or thereabouts. We have gone since right through the year open of 2020, but I am looking now for it to tag the year open of 2020 again. I don't really have a time frame based on that, but I would anticipate that it would more than likely be before we break to new all-time highs, and that might be a great area to accumulate. One glaringly obvious thing that you'll notice from this chart is that we haven't tagged the year open of 2017. Now, I don't want to scare all the bulls out there, but we haven't tagged the year open of 2017. Now, it doesn't mean we're going to do it. It doesn't mean we have to, and I definitely am not leaning that way, but just keep your eyes on that. It would be quite devastating if we had to tag that year open. Okay, so yeah, that's my weekly chart, and as you can see, I've still got the liquid zone that I had marked out before, purely based on support and resistance here. On that uptrend in 2019, that's the area that gave us a bit of a sell-off there or thereabouts. We broke through. It turned into support. Twice it turned into support. In fact, on this occasion, it sent us up over $2,000. This time, around about, I think even this time it was close to $2,000 or $1,500. We broke support, tested it back as resistance, and it sent us back down. We broke through here, and I see this as a bit of a swing pattern failure, albeit on a very high time frame. It was a bit of a bull trap. We closed on a higher high on a weekly basis, causing people to anticipate that we might set in a higher low and then off to the races. It did exactly the opposite of that. In fact, it didn't even use this as support. It smashed right through, and perhaps where a lot of people had a lot of buy orders around the 21 EMA, it absolutely decimated that and sent us right down to approximately $3,700. What I like about this area here is we've come back as I thought we would, and I only say that as I thought we would because I mentioned that in the previous video, and we're using it as resistance again. So I do anticipate a little bit more to this pullback. It hasn't been that substantial yet. We've come back down to about 85, I believe, 85.28. I do believe that, I'm leaning towards us pulling back a little bit more over the coming days. Although we could have a little bit of ebb and flow up and down, I do anticipate that the lower 8,000s to upper 7,000s is an area of interest, something to watch. We do have the weekly 21 EMA now coming in at about 78.83. So that is something to watch. I do have other things pointing us in that direction, which I'll go over shortly. Although we do have the weekly stocks still pointing up, which is still a bullish thing. We're still living healthily above the EMA on the RSI. CMF, you'll see I've got you at the bottom. There's nothing really to read into that. Let's move down to a lower time frame. On the 2-day chart, we are starting to converge with the 200 EMA and the 55 EMA. You'll remember we had a death cross. We had a bit of divergence between them, but we didn't really play out the usual or the trend that we usually have is, perhaps like a 40-50% drop from there when we have a death cross on the 2-day. Instead, we've regained both the exponentials, and now they're converging as they naturally would. And we could, over the coming 1 or 2 ticks, which remember is 2 days per tick, we could see a golden cross potentially occur. That doesn't mean we won't come down. We can't come down and test that area. In fact, that's a good thing. Pulling into the cross is generally seen as a more effective or a better cross to play or trade. And again, like I said, there's quite a lot of stuff pointing us into that direction. We've got the weekly 21 EMA sitting at approximately 78.80. We've got the 200 EMA on the 2-day sitting roughly at the same area, and we've got the 55. So again, that would be an area of absolute interest for me to take along. You can see here we've also got a bit of an order block here, and if we pull price action back, you'll see that this area here at 78.12 was a strong area of resistance back in November up to sort of first couple of days of January. We have this area over here which held price back, and lo and behold, that is basically where you've got the 78 area. I would like to see us come back and test that. I would actually find that to be a very bullish sign, especially if we can hold that area, reaccumulate and head back on up. But I wouldn't want us to spend too much time down here. I would like it to be, for me, I would like to see that price doesn't give us too much time to buy if we do get a wick below this. I don't mind us grinding this area out a little bit of reaccumulation before up, especially if we create a bit of fear down here and then shorts pile in, and then we mark up, perhaps even benefit from a squeeze. That would be a good sign to me, but something to watch. It's definitely an area that has got a bit of play over and you can even see here, if I pull back the chart and we can move it even further back, you see it even acted as support over here. Support, breakthrough. Again, a little bit of a swing pattern failure here, maybe a bit of a bear trap, and then price got marked up very quickly. Came back, it broke through, tested as resistance, breakthrough, come back, and I would see this almost as a test of that support again, coming back and then breaking through. So yeah, definitely would be a buy for me on that time frame. If we go back into the 12-hour now, you'll see that we did have some divergence between this area and that area on the RSI, which is marked out over here. Basically, higher high on price action and lower high on the RSI. And you can actually see we've actually got three occurrences of that. So you've got 1, 2, 3. And if you move back to price action, you'll see it's the opposite. Let me just get rid of some of this mess here. There we go. You can actually see what's going on. There you can see higher high and lower high on RSI. Generally what we look for there is at least a pullback to the month, not the monthly, the 21 EMA on the 12-hour time frame, because that's the time frame we're seeing the divergence on, and that is sitting at 83.72. So something else pointing us lower there. I would anticipate, though, if we did get to the 12-hour 21 EMA, perhaps an initial bounce, but we'd probably be taking out the swing low over here, which would cause me to think we've got more to go. We do have the 12-hour Stokes crossing down again. We did have a cross up, a bit of a fake out, cross back down. And the 12-hour Stokes, as Eric Crown would say, has been a bit of a cheat code. So I haven't had a good time when I've counter-traded those 12-hour Stokes. So it's another thing that is telling me that we've probably got more downside to go. And this, what we're seeing here as well is a 12-hour golden cross that's taken place over the last few days. It's been about 2 ticks. Yeah, 2 ticks. So within the last 24 hours, we had our golden cross. It's been confirmed, and it's not unusual for us to see price pull into that, as I mentioned, on the 2-day time frame. So there's a lot of confluence between this and the two-day time frame. I like that. There's a lot of things pointing us into this area. If we did come back and got anywhere into this zone over here, but especially if we got to the 55 or 200 EMA for a buy, that would be an absolute gem of a place to manage your risk. Well, for me to manage my risk. Remember, this is not trading advice, and this is purely educational and entertainment. That's it. Nothing else. Don't take any trades or any investments based on what I say here. And you probably shouldn't be doing it with anybody on YouTube, for that matter. But yeah, that's what I'm watching, guys. A bit of a shorter stream today, but I think it's pretty obvious. The areas that I'm watching. I could be totally wrong, but something else to look forward to later is to see when legacy markets open. I think they'll be opening shortly. If we see them pulling back, there's a good chance that perhaps Bitcoin will pull back some more, because there has been quite a bit of correlation between the two. And so I'm anticipating a bit of action later this evening. And yes, this volatility and a couple $100 move in either direction is quite entertaining, especially when you're locked up at home and you having to restrain yourself from going out. Anyway, have a good day. Have a good week further. I'll catch up with you tomorrow. And we do have some cool interviews and some cool shows that we're going to be trying out later in the week. And stay tuned. If you haven't yet, please like and subscribe the video. All right, guys. Have a good one.